Hello, everyone. Welcome to Hunting for Silver Linings. Today is Monday, June the 14th, here in the Great Lakes region of the United States. I'm Corey Hart, the chapter director for Grand Rapids, Michigan, a very small town of 300,000 people in the startup grind community. And we have been doing for over a year and a half this event series called Hunting for Silver Linings. And we started this series because we were wondering what the hell is happening out there on the planet and thought we'd leverage our network of chapter directors in over 125 countries. And so far, we've had hundreds of these conversations, and we found that we've had quite a following now of investors, innovators, influencers, and other ecosystem builders that are wondering the same thing. What the hell is happening? So super excited to have our guest joining us today. So Sergio, can you please give a quick little hello and where are you the chapter director of?
Hello, everyone. I'm Sergiu, and I'm chapter director in Oslo, Norway. So I'm all the way in the north of Europe, and I'm excited to be on this podcast and speaking to the world and to the chapter of Grand Rapids.
Yes, thank you so much. The generosity of the time from our chapter directors to participate in this project has been really incredible. So we're really grateful for that. So now I'd like to get a little background on you personally, your personal background and how that led to you finding Startup Grind.
Sure. So my background comes from I was not born in Norway. I was actually born in Moldova, just before the collapse of Soviet Union. And then I moved to Romania, studying there. And then when I actually, for a brief period of time, I lived in the U.S. in Florida Keys. So that was me trying to do something completely crazy, being just able to travel. And I was like, where I go somewhere. And I had this opportunity to go in Florida Keys. So I spent there 2 summers. Very, very, very unusual experience and very unusual way to get to know the U.S. Um, so I studied in finance. So this was kind of my it's an Eastern European way of kind of your parents tell what you're going to study. Do something difficult, something hardcore, because the more difficult you do, the easier it's going to be for you to find a job. So with my finance education, I started working in a small investment bank in Bucharest, and from there, I was 20 years old, and I was feeling that my life was getting way too serious, way too early. So I went I had this opportunity to go for a double degree in Norway, and this is how, like, in a time span of like 3 months, I was suddenly I was in Norway studying another master's in finance in Norway. And so that's kind of, I had this background in finance and investments early on, that kind of stuck with me for like the remaining part of my life. And then while being in Norway and studying here, I was looking for some I was thinking, like, what does Norway do? And then the obvious word or topic that comes to your mind is energy. At least that's what I was doing at the time. So I applied for a consulting company that was covering the energy world. So that's how I started working in energy consulting. I changed the company in the meantime, but I've been basically working with energy consulting on the commercial side for almost 9 years now. So that's kind of everything before Startup Grind. And then how did I get into Startup Grind? To be fair, I thought this was something completely outside of my area. I was helping a guy who started Startup Grind in Norway in about 2015, as far as I remember. And one day he had to stop doing it, so he asked me to take over. And I was like, of course I'm not the right guy. I don't know anyone here. I don't know the tech space. I'm not the right guy. We found the right guy who had actually the amazing CV and amazing kind of background to run a chapter. And then he basically didn't do anything. So then the one event we did in that period, because the HQ was asking us, let's do something cool. I did it myself, and I realized, like, actually don't really need to know a lot of stuff, or it's just about execution. And if there is one thing I've done, in both my finance job and consulting jobs, is getting shit done. And basically, I started, I made this commitment. I'll, a bit like Brad Felt's community builder book says, make a commitment, long-term commitment that you're going to build a community here. So I was like, yeah, I'll do that. So then I made a commitment to grow this chapter in Norway, to make it thrive. So 5, 6 years later, I'm still a chapter director. Have learned a lot of things on the way, met a lot of exciting people on the way, made a lot of good friends on the way, which is part of the startup grind mantra. No, don't just make contacts, but actually make some friends. Made all the mistakes possible in the process. You know how it is. And today I'm in this kind of weird weird spot at not asking questions but answering questions, which is feels interesting, feels different though. And before you ask your next question, just wanted to congratulate you. I mean, you are the rock star, the startup grind director of the year. I don't know many directors who have done it after less than 6 or 7 years of doing work in startup grind. So congratulations. I mean, you are the hero.
Well, thank you. Yeah, it was a bit of an alarm for me to receive that, especially as you just mentioned. I've only been in the community since late 2019, but it's this project right here that, of course, gained the attention of folks, and I have to thank my colleague who's just joined us, Yorgo. It was actually his idea when we were sitting for coffee. Weeks, maybe just a week or two before the lockdowns here in the U.S. Hit our region. So we just, like I said on the outset, we were wondering what the hell is happening out there. So and through that we built a community within our community, right? Startup Grind. We do such a great job of, like you said, asking everyone else, what can I do for you? We don't necessarily ask people what they can do for us, right? So we just spent 150 conversations asking people what we can do for them that happen to be directors, and have started to connect the dots and make connections and help people where we can. So and it's because we approach things from a mindset of abundance, right? There's enough. So anyway, thank you very much. Now, before we get sidetracked and into the things, I'm excited I want to hear about your impressions of U.S. culture from spending 2 summers in the Florida Keys, because that is a very unique culture down there. It's not necessarily representative of the U.S. as a whole. So what were some of your takeaways from those experiences?
I'm a big nerd at kind of learning cultures and understanding these things. So I absolutely agree with you. I got it right away that I was actually living in Key West for a while, so that they are specifically proud of being this conks, the conch republic. So it's a completely different mindset. But the good thing is that being in a tourist town, you do see people from all around the US and world even. If a cruise ship comes to town, and then in a time span of a day, you will see people from from all the geographies of the US. Um, I think I learned very fast something, which I knew from the movies and from the, I mean, American culture is quite known, just from watching TV shows, I think, for most of Europeans. But you do learn that actually it's true. Americans are all different. I mean, it's not one country, America. I mean, it's US. I mean, it's every state is different. It's in its own way. At some point, I got so good I could just look at a person and tell them like where they were from. Maybe not down to the city, but at least pinpoint the accent, pinpoint the way they were talking, the arrogance, from the different states, and when people are on holiday, and they all relaxed, you don't have the same conflicts that you have today, maybe. Many years later, a lot of politics involved. Back then, people I felt more relaxed. So I think I've enjoyed that part kind of discovering, today, oh, you are from New York, right? Actually, no, I'm from New Jersey. Like, oh, sorry, I made a big mistake of calling you from New York. This kind of small peculiarities of the U.S. Culture and subcultures. These were really fun to explore.
Yeah, so as a child, I spent summers with family in Austria and in Tyrol in the Alps, and small little villages, and everyone knew about the U.S. culture from TV shows like Dallas and Baywatch, and so they expected like all of that on me. And I was like, I had to represent that version of America, which is very interesting. And then to your point, I was raised to be very particular about standing up for myself as I'm from Österreich. I'm not from Deutschland. Like so like even though the border is 20 minutes drive that way, you know. So anyway, uh, thank you for that. Yeah, the U.S. is very interesting. We have some say 9 distinct cultures here, and the different regions behave very differently. And so, developing a palate for culture is maybe like developing a palate for wine, right? A lot of nuance, and like and eventually you get good enough where you can be like, yeah, you're not from Oslo.
Well, the other thing is when you live in a few different countries, you have this problem of a person who moved around, that you're was it Einstein who was saying that in Germany he was a Jew, in the US he was German, and you're never your own kind of, I know a lot of Swedes who live in Norway, and they have the same issue. In Sweden they are Norwegians, and in Norway they're Swedes, and it's a common issue, because I mean, despite the globalization, despite us speaking the same language, and despite all, when I was graduating from Bachelor in International Business, I think that was the year when this book, The World is Flat, was kind of trending. Like it's almost a Bible of globalization, and I was like, yeah, this is my life. I believe in this, but I'm seeing more and more that that's not the majority. Majority of the people, they're still comfortable with speaking their own language, having their little groups. We've seen this partly in the kind of current trends again in politics, that we do, even if we tolerate other cultures, there is an element of pride and nationalism that we still have. And I must say that at some points in my life I went kind of I pushed the limits at telling people, like, screw this kind of national identity. I mean, in the end, we're all humans. Because a bit like I think the right kind of belief in today's world is that nationalism is good as long as it's good nationalism. But the question is, when do you cross the line, right?
Well,
And
just hits the face.
and the good example, if you look at sports, and like let's take Norway. I mean, it's a great country. We do a lot of UN work, and helping other countries. Lots of kind of development, human development kind of support, and money floating around, and it's kind of everything kind of feels good. But when it comes to skiing, God forbid if the French guy is beating us once in skiing. There was at some point actually a case, and one of the French cross country skiers won in front of the Norwegian guy, and they were seriously talking about forbidding him to come to Norway to train in Norway, because he cannot use our powder and our ski our snow, so he can beat us in skiing. So you just see how easy it was for a country that has like all the right values to just suddenly say, wait. But you're different. You cannot compete at the same pace.
Um, that's that, those are some really incredible observations. But I think that's on the best side, all that difference is romantic, right? And tolerance is different than inclusion. Those are 2 different things, and you can appreciate, and there is definitely room and need to honor one's culture, right? Yorgo, before we move away from Sergio and his background, do you have any questions for him?
Sure. First of all, it is a great pleasure to have him on Hunting for Silver Lining. What he has actually brought up is a relatively recent field in history and historical analysis. It's called diasporic networks. And in fact, you're both skirting around the importance of diaspora and how these networks, formal and informal, have shaped our world for the last, well, 3,000 years. When you leave the quote unquote village that raised you, you start discovering other villages. And the concept of self and other is formed by precisely moving beyond the biases that quite interestingly, Daniel Kahneman has been mentioning in both of his books, Thinking Fast and Slow and Noise. These biases are so limiting, both in prospect theory, in understanding risk, but also in terms of allowing others to shape our views of who we are. And Sergiu, this is wonderful observations. Thank you. My question before we go forward, you mentioned finance. What was your specialization when you did your master's?
It was finance, so financial economics. So I've done everything from fixed income assets to derivatives to, base kind of finance theory. So portfolio management, all those kind of things.
Okay.
But I've worked for like my first serious job was in front office and trading. So this was kind of, I was 20 years old and I got this job where I was basically handling the money of a bunch of rich individuals, and not all of them, just to say it politely, were exactly earned in proper ways. And not all of them were exactly the kind of client you would like to have as a portfolio management. These were people who they would come to you and ask you, okay, so tell me a tip, where are we going to make money? And I would be like, this is stock market, it's efficient, it's they had the belief that the financial market is basically a 100% insider trading place. So you go to the broker because he will just tell you a sure thing. So if not, why would I even talk to the broker? So there was a fun world, to deal with these people, and I think it was my first lesson in managing expectations with difficult clients. I use it very, very, very well now in consulting. Not to be afraid to stand up to those people.
You're bringing up a number of interesting things we were discovering, both in terms of bringing together entrepreneurs, innovators, and capital allocators, but also broadly defined what is risk. And I think that most people don't realize that financial markets are complex. They're not only equities. It's interest rates, it is bonds, it is precious metals, it is oil and gas, it is corn, soybeans, and wheat. It is foreign exchange, and it is ETFs. And then you go beyond the cash market and you have the futures and the options market. And this whole complex system participates in the price formation and is anchored on expectations. So
I completely agree.
It's very interesting.
I'm wondering if you're going to slide into the discussion about meme trading these days, and it's as you're saying, it's I had an event actually 3 years ago with the founder, very, very inspiring lady who created a company that's basically fundraising, build a platform for fundraising for startups, and then listing the round in an SPV, and then basically it allows also the secondary market trading. And it's a small neat little niche experiment in finance for startups, right? But I asked her about the vision, like what is your vision, like for the future of investments and trading? And she told me, well, I see in 30 years you'll wake up in the morning as a retail person, and then you'll, based on your feelings and your kind of your preferences in the world, your portfolio will get allocated towards the stocks that represent who you are and what you want. Kind of this ideal world that our personal preferences will be reflected in our financial investment decisions. And that sounded very nice in theory, but then I'm looking now at this army of retail traders that are basically showing how everything is wrong with what we're doing, and how we can actually the boring quants are actually the more rational people. So it's kind of created this paradox that do we want more democratization in finance or not?
Well, also to this idea of the retail traders and the meme stocks, the platforms on which that they're participating don't even give them full insight into the data that would normally take someone like you, Yorgo, or myself to actually evaluate an opportunity. If you go in Robinhood, you're given like five choices, like kind of like what you said. How do you feel today? Do you have the smiley emoji? Click here, invest here. Do you have like the frowny face emoji? Click here, right? Is that so? I think unfortunately they're not like the meme folks are not armed with the tools to make even good decisions around risk. And what do you think about that?
I think we've had this issue before. I mean, I think all of us are old enough to at least remember the dot-com times. It was less powerful because there was less the internet was slower back then, and but basically there was this, when greed hits the crowds, everybody just wants to get in and hopefully to get out when the music stops. So to me, this whole AMC GameStop world is I would bring a metaphor. The game where the music plays and you have 5 chairs and 6 people, and when the music stops, everybody has to stop to kind of sit down. You basically have the same exact situation because everybody who's talking, every redditor is talking about the short squeeze, right? And what does a short squeeze mean? Well, it means that we're going to get the price astronomically high because somebody has to sell. But the question is, will you sell in that moment? Well, of course, because you want to probably make some money. But then everybody will want to sell then. So basically, you end up like, even if you, let's say, magically succeed in this short squeeze, concept, then how are you gonna take advantage of that? Because that would mean that everybody would have to sell in that moment. So it's it's a typical kind of irrational built a greater fool theory, I think, that everybody just wants to kind of drive something up and hopefully make money out of it. But it's just completely ignored, the boring kind of value concept of value. What is value today? Is a company worth 1 billion, 10 billion, 50 billion, 100 billion?
Yeah, well,
Again, you're bringing up a couple of interesting things here. I've taught at the University Finance because of my background, and the late David Swenson, who used to be a great guy managing the Yale Endowment, and he also wrote a couple of books. He used to tell his students, but also his traders, that there is 4 pillars in financial decision making. One is financial theory that gives you the tools to understand how to appreciate, how to value risk. The second is economic history, so that you know the highs and the lows in broad, very broad cycles. And then human psychology and current affairs. Current affairs are volatility triggers that move away from a perceived mean. And you know from theory that particularly volatility tends to revert to the mean. So the meme stocks and all this is just noise. However, what is very clear to me, and you brought this up, Sergiu, not many people remember the collapse of long-term capital. Not many investors understand the meaning of what it means to invest in early stage development companies. The probability of death is 99%, right?
Correct. Yep.
So the portfolio approach is generally a good approach, but then you have all this money sloshing around that is violating the cardinal rule of risk management, meaning you want your principal to be returned first and foremost, and then you look at the return on your principal, right?
Yep. I think the issue we have here is that this discussion, the way you and me are talking right now, will make 90% of the people just drop off. They'll say this is too boring. It's not interesting. And I was talking to somebody last year, before the meme craze, that even in a country like Norway, which is like it's educated people, it's doing well in all kind of the scores, developed country. I think the percentage of people who bought a share or a stock for their kind of own financial management is about 3%, and that is dangerously low. So that's a bad thing, because you have issues like inequality. With the bull market for 10, 12 years now. Basically, you have an issue because the rich people, they are having stocks. Even if nothing happens, their stocks go up in value. The poor people just are using their salary, so they're staying flat, right? Um, so then you want people to be to do more financial investments. But I know for a fact, my friends who have studied finance, they have never bought stocks. They might maybe bought some um, some ETFs, or bought some kind of mutual funds, but it feels like it's a difficult world out there. So then when when Robinhood comes and like we're gonna democratize the whole thing, and the outcome is what it is, you're wondering like, is there a way to do it properly? Is there a way to make uh, to basically as a friend of mine, an economist, we were having many beers and talking about this concept. He was saying like, maybe we should just take make you pay tax 30%, and then from the 30% you paid in tax, take 10% and invest in your own stocks, like we're doing with pension funds. In a way, like we should teach people to do some responsible, boring, and the key word is boring, financial investments. Because yeah, investing in a utility that gives you 5-10% annual return, it's boring. It's not volatility of meme stocks.
Yeah, so I do want to move on from this topic. However, I'm excited that we brought this up, because you, as a professional manager of risk, or at least an identifier of risk, uh, this last year and a half has been, of course, undoubtedly challenging, no matter where we live on the planet.
Mhm.
And you, having invested 5 years in growing your community, from your, which is, I think Yorgo will agree with me, a unique perspective on risk within the startup community, because most of us are just startup founders and don't have the expertise, right, to see such things. What do you have any stories from us, or do you have? Can you tell us what are some of the most common pieces of advice or questions that your community has been asking you, like, as uncertainty at the beginning of the pandemic was hitting us, and now as there's uncertainty of how we're going to emerge?
Yeah, that's a very good question, and I think when pandemic hit in March, April last year, everybody kind of freaked out. I remember the first observation was that suddenly, there are a couple people doing some great newsletters, like covering the Nordic market, and one of my first observations was that suddenly those newsletters were much longer in terms of closed closed rounds. So pandemic hits, everything looks bad, and suddenly people are closing funding. So I know, after talking to some of them, I realized that what was happening is many startups were in those kind of they were raising funds, and they were kind of keeping the process open, 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 open. And when pandemic hit, they were like, oops, we better close this soon. So that's kind of what happened, as immediate effect, last year. Then of course, when the panic hit, different startups were kind of trying to figure out, how this is going to affect them. Everybody was trying to kind of cut costs, do something. Kind of you get into that kind of uh, the war is starting. We need to get into the war room. Like, how are we going to prepare ourselves for this? Uh, I think longer term, I mean, after kind of the worst moments in time, the realization was that, at least in Norway, I don't know how about other markets, but there was a lot of governmental funds that actually investors were not afraid to invest. There was this whole mindset that just like SARS crisis, in some years ago, kind of accelerated the move towards internet and digital. We got a bit of that, in COVID crisis as well. So I don't think the feeling overall was that it was problematic. Another thing that happened in Norway, Norway just celebrated like their first two unicorns. and one of them is had SoftBank as an investor, and there's another. It's basically the influx of free money that started, basically from the Fed, and kind of, it drips from Fed to different funds, and goes all the way down to venture capital. It just meant a lot of cash. So if you had a startup that kind of looked investable, finding cash was not a problem. So what is the question that I'm hearing more these days from founders is, will the party stop? Should we prepare, like Google did in 2000, just fundraise a ton of cash in case, suddenly, everything goes bust, and then we're going to be the first ones, or how do you prepare for kind of the, the lack of cash? Because as you mentioned before, there is an element of cyclicality in in fundraising. Yeah, long answer to your question, sorry.
No, that's great. Yorgo?
This is probably one of the most interesting discussions that we've had in a long time, Sergio, because again, not only as a startup grind director, you bring insight, but you also have a significant financial expertise, both in terms of theory and practice. And you're hitting the nail on the head. On the 18th of March of 2021, the Bank of Norway kept interest rates at zero, and yet announced that it would expect that by the end of 2021, it would start increasing interest rates. Here in the US, the debate is becoming ridiculous because Jay Powell has refused to understand that inflationary pressures are building up, and the price formation process has been skewed by not only supply chain limitations, but precisely what you described as negative interest rates and the wall of money. Just over the weekend, I was looking at the press. The private equity industry is $7 trillion industry in the US. It's almost approaching 30% of GDP. And this is a really big industry. So what you respectfully are interested in mentioning as the wall of money coming to Norway, and now young entrepreneurs are asking, okay, well, when is the party going to end? I think we are at the end of a very long Goldilocks period. We are seeing price aberrations. We're seeing anomalies like the cost of housing, the cost of lumber, the cost of wheat, a bushel of wheat, soybeans. Look at oil. Oil is at $70 a barrel. And last year, this time, if you remember, we had for a week in April, negative prices for the futures of oil. So the picture is very complex, and I'm delighted that you have this insight. I think what is also very interesting is to see that many of the sophisticated risk takers are reducing the long positions in most asset classes, because what we've seen is this liquidity has created correlations of almost 100% across asset classes that used to be negatively correlated even, like for instance, stocks and bonds, like the value of the dollar and gold, et cetera, et cetera, et cetera.
I think the interesting angle to bring here is what do you do as a venture capitalist? Because as a venture capitalist, you're being rewarded for taking the greatest risks, or I mean, I'm probably exaggerating, but you are being rewarded for not doing the NPV cash flow evaluation. You're being rewarded by believing that these two guys or three guys will actually build a $1 billion company from renting rooms in other people's houses. It's a crazy idea if you think of it, rationally, but they made it happen, right? So when we're today, imagine you're a VC today, and I'll give my own kind of reasoning on, let's take crypto world. I'm struggling to see value in crypto. I remember in 2018 when Bitcoin hit 10K first time, we were getting a lot of calls, as energy advisors on like, where can I find cheap electricity, because we're coming on Monday with our containers, the GPUs. There was like this gold rush feeling all the time. So everything was going crypto, but the narrative was still that it's technology. It's a new technology, it's new use cases, smart contracts, all that kind of stuff. Today, I don't hear anybody talking about that. Like even Vitalik, is dancing on the stage, and promoting Ethereum. And like, I feel like nobody even claims that it's about technology. It's about business models. It's about something that actually, will have a value at some point. It's pure speculations. So my question is, when you are today as a VC, and there is somebody coming to you with a business case, some software as a service, B2B, you know, uh, with some growth projections, but not insane growth projections. How do you choose between that and you know, a rocket, a lottery ticket on some new crypto venture that might give you 10x within half a year, and that's it, and then you sell and you're good.
Great question. My only answer to this is go back to history. And when you do your research, that the average angel investment is anywhere between $175 to $250,000 at early stage. You repeat it in year 2, you repeat it in year 3, and hopefully the valuations go commensurately to the growth, not so much of the NPV because it's meaningless, but as you said, of the jockey. Most of the venture capitalists will continue investing on good jockeys who are able to manage risk, both their own and the corporate intrinsic risk that they are building the foundations on. Having said that, the valuations are stretched, both public markets and private markets. So good luck to VCs. I still stick to the rule. Out of the first 100 companies you look at, you invest in one. And out of the 100 ones that you invest, maybe you're lucky to have one great platform technology. But this portfolio approach is full of biases.
Mm-hmm.
I'm waiting for when VC will say we're returning money to investors.
So I'd like to move on from this topic here and get into a little bit more about your ecosystem. And I want to thank Marla for bringing this up. We always do like to get from our guest what's happening as far as popular sectors. I mean, textiles, lumber, metals. Like Norway is known for a lot of these things. Obviously, natural gas, shipping, food, fish, but what's is there something changing right now? Like where are the startups finding their focus as far as industry?
I think there's a bit of a decorrelation between what is Norway as an economic power and where the startup space is going, because yes, you did have Norway is basically oil and gas an industry, power, electricity, another one. Kind of we can put it in energy together. Then you have the some kind of power intensive industry like aluminum and stuff like that, and fish farming. It's an exciting area as well. There are innovations in all these spaces. Definitely, there are lots of they're big industries. Of course, there are startups coming and trying to find a way to digitalize. Actually, the first director who started Startup Grind, he left Startup Grind to join this fund that invests in digitalization and software companies within the fish farming industry. So specifically on that. So it's a bit of a boring area, you would say, but it's as what we talked about just now. But it's an exciting area, right? But if I'm thinking now, like what is the hottest now when you speak technology in Norway? What are the trends? I think right now, because of the partly because of some SoftBank investments, one of the hot names in Norway is this company called Kahoot. Have you heard of that? Just curious if it's been heard in the US, because they were probably one of the first names to kind of build a proper kind of tech company and grow it, have the kind of B2C angle, have the B2B angle, and it's basically they started with a quiz which people are using like a platform for doing quizzes in bars and at parties. But then they went all into education, ed tech. Were amazing in executing and selling. I think they went all in on schools in the US. So by doing that, they became, close to being the like unicorn material, got lots of funding, started acquiring a lot of other companies. So they basically created this whole ecosystem of edtech startups. And looking at Sweden and how they build their powerful tech ecosystem, it really comes from these big successful names, because Swedish ecosystem started from Skype, that basically did so well. They made a lot of money, made an exit. From there, you have a bunch of cash and a bunch of talent. And not just the founders, we're talking about even employees, and you have at least a little mafia, like the PayPal mafia kind of concept. So from there you would have Klarna, you would have Spotify, all these people kind of, you have like a cluster of companies going from 1 to 10 to 200. So now if you look at all the successful Swedish companies, they're somehow related to this cluster. So I think if you think of Norway, the Kahoot was kind of the one of the first kind of clusters of edtech. Right now they are flush with cash, and they are buying companies, and they're doing a lot of stuff. They have listed on the market. Um, the two unicorns which I was talking about before, they were actually fighting about which one was before the other one, because the investments were made in a time span of like 2 hours or something like that a few weeks ago. So that is Oda, or Colonial, the old name, and that's a grocery delivery, online groceries. I had their guy on the CEO on the event of Startup Grind, and it's an amazing team of people who just get stuff done. It's he's an ex McKinsey guy who together they I think they were 9 people, all with like banking and consulting experience, and then they just built this company from nothing to being now worth $1 billion. And they up until this year they have only focused on Norway. So they focused on getting these online groceries deliveries sorted out in Norway, and now they are really a powerful name. And the other one was Cognite, which is it's an IT company that it's a little. I must say I'm not exactly sure what they do, but they do have some of the oil companies as clients, and I think they're doing kind of this big data and data ops and AI as a service and software as a service. So basically digitalizing these corporates. It's a little bit obscure from the outside when you're not like directly working with them, but they have been thriving.
That's awesome. That's funny. There's so many cases of like, what is it exactly that you do here?
Exactly, yeah. And I see the questions in the chat now, because I haven't talked about sustainability, and well, definitely because of Norway's profile, sustainability it's a big topic. There are conferences, there are specific accelerators focused on that. It's a big topic, but I didn't mention it in the first place because I don't feel like we have successes, and that just proves that building a successful company in sustainability is not easy. It's like we had a name called I mean, it's still like the company is still running, called Choose. They were they were offering some kind of way to offset your emissions. And they got all the traction possible in the world. All accelerators were loving them. They got an invite to Richard Branson's island, like everything. Like whenever I would meet somebody, a Startup Grind Global conference, I would tell them I'm from Norway, and they would ask me, do you know Choose? This was kind of the level which they got. But I'm hearing less about them recently, and I'm guessing I mean, the good thing was that they managed to put the price on people wanting to be sustainable, which is valuable. But I feel that they just prove that it's not easy to actually build a successful huge company just on that, because having been in the energy space for for some years, I know that sustainability is a bit of a fuzzy concept. First of all, nobody really knows what's the definition of it, where does it stop being sustainable? And often, sustainability actually becomes greenwashing. So there is this overall feeling, we almost forgot now with COVID that 2019 was all about Greta in Sweden, kind of getting people, like kids in the streets. There is this whole war kind of society, and people are angry about climate change. But whether it's going to be a tech startup solving that problem, or it's going to be just utilities slowly fixing the problem themselves because regulators force them, that's a little bit still a question mark.
It's probably going to be a mixture of both, right? We just had a really great guest, Captain Hoffman, on our program here, where we had a long discussion about these kinds of ethical choices as we are beginning our enterprises as founders. And when we hire onto our team, do they buy into, do they subscribe by the same ethical boundaries that we put on our success? So do we do this organization, do we grow it sustainably, or what kind of compromises do we have to make to still also feed our families and our teams, et cetera? So, but yeah, these types of things have to be in the DNA of an organization if you want to be sustainable, right?
And one other aspect of sustainability that we discussed with Steve Hoffman, which I think is really interesting, is how we're moving from a top-down patriarchal corporate organization to a decentralized, almost matriarchal kind of decision-making. And both artificial intelligence and blockchain technology are playing a big role, especially when it comes to analytics and big data, and especially within this domain, associative analytics.
Absolutely.
So we only have a few, we're coming up to like the end of our hour. I wish we had more time. But I do want to get some insight on how it is to do business there. Norway is known for being exceptionally easy to do business, and as innovators, is it largely these private individuals that you were speaking about earlier, or if Yorgo and I were interested in coming to Norway and doing a startup, would we start with the government, like Ministry of Trade or Innovation Norway, or do we find you? I mean, how do we begin?
It's a good question. I mean, depends on what you want to, do you want to invest, or do you want to start your own company there? You have an answer to that, or?
Yeah, well, yeah, I'm talking about the innovators, the founders, the startups.
In general, being a founder in Scandinavia, it's easy, and starting a company is quite easy. There were because there is a social safety net. You can get almost paid by the government while doing a risky project. It makes the barrier of trying something very, very low. So that's kind of the good thing about the Nordics. There are some issues about stock options packages, and this is something that entrepreneurs have been complaining a lot, that you cannot really grow a successful company in Norway, because if you have to reward people with stock options, then you get penalized, you get taxed insanely. So many of these companies that we talked about, they would start in Norway, they would build the ecosystem, like they start from the ecosystem here, but then they would move to they would incorporate in the US or Delaware, kind of the traditional kind of route of building a company. As a foreigner, if you come to Norway, I think people are quite straightforward. I think that's one of the main things. People are quite direct, and that's a good thing. If you want to invest, I think there is a common kind of model that I see, that we have some a VC industry here in Norway, and they all are very well connected with the bigger names from abroad. So it's normally a lot of co-investing, because if you're a good name, and you're not going to just go straight to Silicon Valley, somebody will see you here and you will be on some short list, right? If you're really more interested about this topic, one of there's an American guy. He was running. He came to Norway some years ago to fundraise a fund for 500 startups. He wrote even a book about doing business in Norwegians, and it's a bit of a funny story because he's open about it. He came like with this American attitude, like I mean, Norway is a rich country. I'm gonna easily find a lot of money, and he got a bit lost in the cultural dialogue. People not telling him no, which is a very kind of Nordic thing. You don't tell people no, you're being polite. And basically he just spent a lot of time and a lot of meetings, but didn't fundraise a fund. So in the end, he gave up on it, but he stayed in Norway. So he wrote actually a book about concrete tips on how to deal with in business with Norwegians. It kind of feels easy at the surface, but it's not completely easy. Like there are certain peculiarities. I mean, it's of course not the same as going to Japan, where it's a huge cultural gap. Here everything feels the same, but the difference is they will show up once you kind of get closer to closing the process. And of course, we say Norway, but there are different people. There are many Norwegians who have lived abroad and they can adapt to your culture, and there are many who will want things being done their certain way. So it's but I'm as anywhere you go, it's always good to have local people on the ground to kind of get advice.
Mhm. Now you mentioned this aspect of mindset locally and regionally there. We have time for maybe one other question after this. But so in doing business and getting a startup started, so let's say we founded our startup, we have some traction, but we're still like trying to get scale. If everyone's just being so nice but still not buying our product, like how do we like have that focus on customer, like in a mindset like that? Is that something unique to like your ecosystem, or what's the advice you give your founders?
I think this is where we actually give a lot of advice, because the stereotype is that in Scandinavia, although you might see Swedes, not Norwegians and Finns, kind of one country, and Danes, Swedes have been the ones who are amazing at selling. They made Absolute Vodka into a global brand. Yeah, think of ABBA, Volvo. All these are brands that have been created in Sweden. And Norway, for example, some of the technologies that are in an iPhone are made in Norway. Some smart guys have worked on it. Nobody knows about that. So even this Norwegian successes, they're not known as brands. So this has been the kind of the one of the kind of advices we've been saying a lot, and everybody has been saying to Norwegian founders. Focus on the market, focus on the customer. In 2021, I would almost not advise anyone to go for a B2C. I mean, B2C has become way too difficult, way too expensive, whatever you're trying to do. So whenever you hear somebody saying, I'm going to build a platform, a new Snapchat, it's like you might succeed, but odds are against you. I think the most successful kind of companies, kind of at scale up level, are the ones that are really kind of nailing their customer, their B2B customer early on, and they understand that the classical kind of software as a service, understand your customer, build revenue stream, kind of there is a lot of advice on that topic, many books written about that. And I've read many books, and sometimes I'm getting shocked how directing a founder to a book might give him a lot of value, because you'd be surprised, but people these days don't read. Uh,
Yeah, it's amazing that we even have jobs with Google, right?
mhm.
Could you just Google it? Like it's all out there. Yorgo, any last thought or question for Sergio before we ask him the last question and then continue?
Exit strategies. What's going on with the exits?
We haven't had so many exits in the Nordics. As I said, we're a bit behind. And again, we're looking at Sweden. They had Klarna exit, Izettle. Some of the big names. Actually, the one of the problems we have had here is that we've seen some of the successful startups. When they grow, the founders don't grow with the companies, so they would sometimes kind of move on to new startups. or move on to new projects. And that is a bit of a problem because you lose the same kind of startup mentality. We have very few examples where you have like a Facebook with a Zuckerberg kind of growing into a CEO and kind of bringing this different angle to it. And I think this is one of the problems why we maybe haven't had so many exits as well. So I think there is a lot of work to be done in the ecosystem until we start having some of the good exits. We're happy now that we've had these at least three names I mentioned: Kahoot, Oda, Cognite, that are not selling, that they are trying to grow as companies. One of them is is IPO'd. I think there is a bit of the wave now with IPOs, so that can be seen as an exit in a certain way. But it's we'll have to wait a little bit more with the exits to see what's happening there.
Awesome. So I have a standard last question that I ask everybody on our program. And this, and I'm going to ask you too, because two questions related. First is what can the global collection of Startup Grind directors and ecosystem builders, innovators, and investors do for you, Sergio? What can we do for you? Since you're so busy asking others what you can do for them, we're asking you what we can do for you. And then secondly, I'd like you to challenge the audience of whether it's directors or innovators or investors. Like what is your challenge to them in this next 6-12 months?
Very, very good questions. Thank you. I think I'm terrible at asking for advice and help myself. It's I guess it's the finance kind of education that you always have to pretend that you're strong and you know what you're doing. I think now that I've told you, a little bit about our ecosystem, feel free to recommend some founders who have experiences to share. I think even if we are everybody speaks English in Norway, we're still a little bit too closed, a little bit looking too much inside. If somebody kind of makes it in Norway, it becomes a guru, but the experience of growing a B2B startup globally will not come from Norway. It will come from any other founder. So if you know a name that he's happy to share, or she is happy to share her story, I'm gonna be happy to have her, tell the story to Norwegian entrepreneurs, whether virtually or even come to Norway. I mean, we have a nice sightseeing to be done here. So that's I think that's my my ask. The other question was about the challenge, right?
Yes.
I think I'll the discussion we just had with Yorgo earlier today about we talked about valuations and things getting a little bit too crazy, and difficulty that VCs are encountering. I think I'm personally a little bit affected by this, in the sense that I feel that some of the good names there are being shadowed by the bad stuff, by the fake stuff that's being oversold. So I think my challenge, or my ask to the everyone who's listening now, would be with to bring some honesty to the startup space. Because I think it's a discussion I had this morning with somebody outside of the startup space, that they were saying that they wanted to they were offered a job in a startup that looked amazing, and then when they were actually about to quit a well-paying job, a good career, to join the startup, they realized that the startup was basically nothing. They had nothing, absolutely nothing. And that person said, I'm never even thinking about this concept. And that's a loss to the startup world. That's a loss to the startup communities. When people feel that we are kind of in a fake world. So I think again, my ask would be, let's try to bring some honesty to this space. Whenever we see that somebody is overselling something, like to the obscene level, where it's really kind of going extreme to the fake it till you make it, point it out to them. So find one person who's doing a little bit too much overselling, and say to them personally, don't shame them on stage. It's you're not gonna make many friends. But I've done it a couple times, and people said, yes, you probably were right. I probably went a bit overboard with selling something. We don't want more Theranos. We don't want more WeWork experiences. That's only damaging the attraction of talent in our space.
I appreciate your candor and openness, because you're right. We just need more of that. We have to at least wrap up this event. So I want to say thank you so much for the generosity of your time and joining us. I look forward to catching up again, because we have so much more to talk with you about. And then one day, Yorgo and I will sit at a cafe with you in person.
Startup Brand Global 2022. I hope by then we are vaccinated and we are ready to I mean, this is the best part about Startup Brand, is the global network. So I'm really looking forward to meet you in person. And thank you for doing this. I think it's amazing that you're so dedicated to executing on these podcasts. And I know how hard it is to do community as a kind of as a side gig. It's unpaid volunteering work. So thank you so much for your commitment to this. It's hard to keep it going for a long time. So good job.
Thank you very much. The true value is I'm a selfish being. It's in developing and getting to know people like you and your community. There's incredible value. Thank you so much. And we'll see you again soon.